Good afternoon, everybody. Welcome to Trader Merlin Show for your Friday edition, the weekend edition. And I've been so hectic running around doing so many different tasks today, I forgot to bring a drink upstairs. No drink today. I have to air cheers you, everybody. Happy Friday. As Thomason says, thank goodness it is Friday. Man, what a week. Especially the trials and tribulations and kind of twists that we saw just kind of drove me crazy this week. Not the best trading week for me, but hey, it happens. I wanted to go into the graphic to start this show because over the past few days, actually starting last week, we were talking about this strike, this Longshoreman Strike, which I thought would be much, much worse. I actually was envisioning it going on for months because they really are in the driver's seat. They have, collective unity at those ports on the East Coast, and I thought this was going to go on and on. Kind of was hoping it would. I mean, I don't know. I find myself on both sides of it because I'd love for it to keep going on, therefore pushing prices down in the equity market so I could buy back in a bunch of stuff much lower. And lo and behold, a 3-day strike. So I put a that was easy button on the screen here. Of course, I think we all, or not all, but I think most of you probably heard the details of it. They got like a 62% pay increase. Not too shabby over the next 6 years. So it's not all at once, but over the next 6 years. So fine, good. Let them get a pay bump. I didn't see much in there about the AI. But what was interesting for me is this isn't done. I think a lot of people are thinking this is over. It's tentative. It's in talks. They're just delaying it to January 15th. So, you talk about politics and how that weighs into it. And I think anybody who understands the basics of politics understands that there's no way that the current administration would want to have this as the last piece of their legacy before an election because it would just give too much firepower to the opposing party. And all of a sudden, it's pushed out to October or to January 15th. So I don't think we're done out of the woods yet. So you have a few more weeks, maybe a couple months to stock up on your toilet paper from Costco. Just crazy that these people are just buying so much toilet paper because they're worried about the ports. Anyway, that was it. Maman says, I'll double up my whiskey for you. Just don't drive, Maman, and we're good. Thank you for that much. Big Ab, cheers to you as well. Thomasini, you're one of the ones that stocked up. It's funny, I went down to after the show yesterday, because when I buy like the 24 packs from Costco, and I'm like, I still have, I have 4 packs of 6, so I have 24 rolls left. So I have plenty of TP for a while. So that's good news. Having this out of the way, at least not at the forefront, to me, this really is a positive piece for our markets. And I think you saw some rejoice out there today. After that initial swing, get our unemployment numbers out of the way, it just kind of ripped up. We saw a real nice move to the upside. I had one trade that was made off a double bottom, which turned out to be an okay trade. Made a few $100 in that one, but obviously lost more on the Rivian trade with the bad news that came out about their deliveries, and earnings weren't quite as good as people thought they were going to be. And of course, I had the 1150 strikes, and we finished way lower than that today. Let me bring up RIVN. We finished at 1044. So yeah, and I think my average price, because the premium I got was like 1090. So we're 50 cents underwater on those last 40 contracts. So that's 2,000 negative there today. So we'll see how this pans out next week. Not too concerned with it. Typically, this will have a big gap down that earnings, which I was surprised it really didn't have much of a gap down, a slight one. And then we'll see how these rolls back to the upside. But all in all, you look at these numbers today. I know it's hard to read for some of you on the screen, but dollar in. Actually, I'm gonna start there. We'll start at the top and work our way down. That dollar index was doing great, but it's the 10-year was your big leader today, up 3.14%, screaming back up to that 4% line. And when you look at the unemployment numbers, which we'll talk about here in just a second, Chia says, have you heard about a reverse market crash? They call it a melt up. A melt up is typically what a reverse market crash is, where nothing crashes. It's the everything bubble. We've been talking about this at Trading Academy for a while, and it's that phenomenon of almost every asset class surging at once. And I think that has to do with so much money being pumped into the markets. But, the expectation, which I think Lisa is right, she says, when are we going to get a real market correction? Who knows, man? For me, it just feels like it's right around the corner, but the data keeps piling up better and better and better, and all of a sudden it's like, hey, we are going to have a really smooth landing here, soft landing. At least that's the belief, and if you believe all the numbers, and I'll show you the unemployment rate today, the ADP, the non-farm employment change, as well as the unemployment rate today, things look really good. I mean, it looked great up there. Now, this doesn't look as good, and you're probably wondering, well, why are we seeing such a surge? Well, if we see unemployment numbers doing so well, then the likelihood of the Fed cutting their their rates diminishes. I think that they're in a position where they don't really have to do anything right now. There's no need to stimulate the market. They initially were cutting rates by 50 basis points because of the concern of unemployment. Today, instead of coming out at 4.2, we actually came out at 4.1. And let me show you that here, because that really was the story of the day, in my opinion. And I will get you a chart here so we can look at two different things. First, let's look at the overall fall that we've had from the pandemic peaks going back into April and May of 2020. We were at 14.7% unemployment rate. That's monstrous. And now all of a sudden we find ourselves in a situation where things have fallen precipitously. And then since those lows back in 2020, we are starting to see that surge back up. Now, while it was ripping strongly to the upside all the way through August, notice September was a decline. October looks like a decline. So these are good numbers to see coming in, especially after the concern from the Fed that this was potentially getting out of control. And I think a lot of us, including myself, were looking at it going, I don't think it's that bad, but it is definitely trending higher, and this could be a problem down the road, which is why the Fed did 50 basis points. Now, if this gets back in check, so let's say this unemployment number next month drops even lower as we get into November's reading, then what's going to happen? The Fed is going to sit there and say, well, hold on a second. We were concerned about unemployment. That's why we cut rates to stimulate the market real quick, even though inflation hasn't met our target. We got inflation dropping, but we got unemployment rising. Now, if unemployment levels off and inflation continues to drift lower, they could keep rates right where they're at and not cut. Now, I do think they'll cut 25 basis points at the next two meetings. I just think that the Fed's under pressure to do so. But they don't have to, right? An appeasing unemployment rate certainly helps out the Fed in this situation. Now, the other piece of news here wasn't just the unemployment rate. Look at the non-farm employment change. This was a gigantic, huge beat. They were expecting 159,000, previous month was 159,000 new jobs created non-farm. They thought it was going to come out at 147, again, reflecting a decline. We came out at 254. So not only did we not decrease, we increased by about 60%. And you look at the chart here, it really doesn't tell you much, right? This picture looks pretty ugly. But when I get out of that COVID spike, right, we still are drifting lower, although today's reading was great. I have looked at this historically, and it feels like if you go all the way back into, and you can't see it with these skewed numbers. I wish I could remove these numbers from the equation, but it looks like when you get to a number right around 250 to 300, that was kind of a historical norm and a healthy number to be at for non-farm employment change. And let me get out of this peak here. You guys can see it here. All the way from 2011 to 2019, when you got up to 250, that was like kind of the peak for that decade. If we go before that, let me get back here. Oh, I can only go back to 2000. Anytime you get up to 250, like that was a good number. It was a good place to be. And where are we? Well, we're right at 250. So that's actually, in my mind, a pretty good place to be. Of course, you're wondering, why aren't we back with these spikes we saw back in 2021? Well, that's because people were out of work. We had, a negative number here, and all of a sudden flooding the market with money and stimulus, and all of a sudden we went back to work. So all in all, this is a really good place to be for non-farm employment change, for the unemployment rate, and I think it takes a lot of pressure off that Fed to cut rates. Now, let's see. I haven't checked this today. Margaret, you're here with me, so you know I'm going to bring this up here. The CME Fed Funds Futures. Let's see if that probability has changed at all over the last 24 hours and see when it was updated. Right now, there's a 99.2% chance of the November 7th meeting having a rate cut of 25 basis points. But do you guys see the change here? Does everybody see this? Yesterday, there was no chance of rates staying the same. Not even remotely close. And now it's 0.8%. So as you'll hear Jim Carrey say in Dumb and Dumber, so you're saying there's a chance, right? Look at that change. That's a pretty significant, we haven't seen a month ago, back in September 4th, there was a probability of rates staying right where they're at. Now all of a sudden, it's right back to it. So we'll probably see 25 basis point cuts in November. But what does the market think of December? Right now, it's 50 basis points, a 79.8% chance of a 50 basis point cut. So the high probability is between 1 and 2 cuts, each of 25 basis points by the end of the year. I definitely think we'll see one on the 7th, and then we'll wait and see what happens by the end of the year. So that's all in all fairly good news in my opinion, because what that means is the market's doing well, the economy's doing well, and the Fed can kind of go back off a little bit here and not feel aggressive. Because historically, when you look at your Fed funds futures, I've shown you this chart before, it's somewhat difficult to to look at historical numbers and say, okay, well, what's normal? Well, let's look out here at the Fed Funds futures chart, and just so you can see historically what it has done. I mean, this is like an what the heck kind of moment, right? If you look at just this chart here, you're like, oh my God, this is bad. No, it's really not, right? Let's go all the way back into 2000. Not really. These are just market surges. This is fluctuations over time. And yes, we are relatively high back to those 2006, 7, early 8 levels. But yeah, I think the way that we got here is what's the most concerning, because how aggressively we raised rates to slow this whole machine down from an inflation perspective. What are the unintended consequences of such a dramatic move so quickly? At least you look back here in the rise from 2004 to 2006. Those were quarter. I mean, everything quarter, like clockwork every time. We had 20, 50, 75, 20, 50. I mean, it was all over the place, sketchy. Even back here in 2016 when we raised, it was like you had quarter, and just kind of slowly ticked up. These were big jumps here. All right, sorry, I got some questions. I went off on a tangent. Let's see. Most of the new jobs were from government jobs. Yeah, unfortunately. Well, we may see Elon Musk filter that one out. Wonder what the working group is up to. Not sure what you mean by working group there, Scott. But in a couple months, they revised the numbers. Merlin, of course, Gio. Of course they revised those numbers. And again, we're going right into an election, right? We got a month left. Until we'll have a new presidente. We don't know who that's going to be at this point. I'm sure you guys all have your interests and wants and beliefs and hopes and dreams for that, but doesn't matter what they are. Just vote, and hopefully it goes in the favor that you want it. What we'll know is after the 7th, probably the 8th or 9th, and who knows if it gets contentious and they say it's a rigged election and fraud and recounts, etc. But most likely by the end of November, we'll have a pretty clear idea of who that president is going to be, and then we can start building trading plans around that. And we're going to do a special show on this program with Larry Jacobson, our election show, and hopefully we're going to do something different. So what Larry and I decided on doing, and I have in my mind ideas on who would benefit from a Trump presidency and who would benefit from a Kamala Harris presidency. And I think I need to go into it with that, not saying, hey, I prefer this one or I prefer that one. I can't do that. But which one? Whichever one's going to be there, how will I benefit from that financially with my investments? And what Larry and I are going to do is literally right before the show, we'll flip a coin live on air. He can call heads or tails, whatever, and he'll pick who he wants to represent. We'll say, what, heads is Trump, tails is Kamala, or whatever, and flip that coin, and we'll have to represent that person and pretend, make sure we're clear about this, because I don't want you guys to be like, well, Merlin, you're so for this candidate. I'm not. I'm not for either one. I am just like, there's a movie called Brewster's Millions, which I think everyone should watch before this election. And Brewster's Millions, what happened was Richard Pryor inherits $100 million. But he's given $10 million, and he has to spend, I think, $10 million within 30 days, and nobody can know why he's spending it. If he tells anybody, he doesn't get the 100. So he's out there trying to spend money as fast as he can, and people are like, dude, what are you doing? You're just throwing your money away. So what is he? He gets like, someone says to him, you gotta, what are you gonna do with all your money? He goes, I want to get rid of it as quickly as possible. And I think one of his friends joked and said, well, you should run for president. And he's like, oh. So he runs for president, and his campaign is none of the above. All right, there you go, Maman. None of the above. He's like, do not vote for me. None of the above. So, anyway, we will see what happens after the election. But it'll be fun to do that with Larry, particularly doing a random side of it. Because I have a little table built out right now of things I'm hearing Trump say he's going to do and things I'm hearing Kamala say she's going to do. All right, well, if they do this, how does that impact this market, this segment, this industry? I don't know. I like doing that kind of game. You guys think I'm weird, but it'll impact you as well. Brewster's Millions was a great one. I love Richard Pryor, man. One of my favorite stand-up comedy routines ever. I don't know if you guys have ever seen it, but if you have a chance, rent or click on it on one of the streaming sites. It's, is it Sunset Strip? It's Richard Pryor. I think it's live on Sunset Strip. And he comes out on stage, and the crowd's standing ovation. I mean, and they just don't shut up. The crowd's just screaming and cheering and clapping, and it was just comic brilliance. After it finally dies down, he has this bewildered look on his face, and he's looking around the room, and he's like, man, I sure hope I'm funny. And I don't know what it is about that little comment, but for me, it's just such great humor. It's just like, how can you top the opening standing ovation that you got from that crowd? It was off the charts. Anyway, Richard Pryor, rest in peace. So we talked about the unemployment rate. Let's go back to the dollar index for a second, because that was a question that came through here. Let me go real quick to give props to who asked about that, Dixie. I think I saw it in here. Where was that dollar index question? Oh, man, it's tough to go back through and try to find questions as we go. Oh, that was from Robert. Does that mean the dollar index has reached demand already and set to rally moving forward? Well, if you want to look at the chart of the week, which I never use this graphic, but to me, this is your chart of the week. And it's tough because this is the dollar index. I mean, look at the breakout that this thing has had. Not only the move, last week, and I'm always fine to admit when I'm wrong. Last week I was looking at this going, man, we got to close down below that yellow box. We broke below some significant lows. Therefore, this to me was really important as a potential short opportunity. And what we got was a little bit of hesitation there. We didn't get any follow through, so it certainly didn't have the conviction that I wanted. And then all of a sudden, by a combination of the Fed and Japan also, we saw a huge surge up in the dollar index. And, really kind of in a no man's land, right? It was just the bottom of that box, broke it a few times, and then ripped to the upside. So huge bear trap that ripped to the upside. And now all of a sudden the question is, well, where's it going to go? I mentioned this level on a couple days ago where it looks like we'll probably come back up to this next area where we had that big turnaround, which is about 103 on that dollar index. So this is reflecting several things. Number one is the carry trade isn't as big of an issue because Japan pretty much said they're not going to be raising rates much anymore. They're going to kind of wait and see, which is great for the carry trade. That allows people a little more time. But the fact that we look at the announcements today from the jobs report and the comments from Powell and other central bankers over the past week, we've learned that the Fed is thinking most likely maximum 2 rate increases this year. And actually, Jerome Powell's comments have alluded to the fact that we may not see any more rate cuts this year. And especially given what's gone on with the unemployment numbers today, I definitely could see an argument for no rate cuts. But I'm in the camp of one more. I think we'll get one more. What that means is you're not devaluing the dollar anymore by cutting rates as aggressively. So that's obviously brought in a surge back up here. Now, does this mean, Robert, that this is over? Does this mean that it's done? That it's going to kind of keep on ripping to the upside here? That's a tough one. I really don't think that long term this is the bottom and all of a sudden it's nothing but glory days ahead. I don't think that's the case here for the dollar. I think what you're going to get is a rally back up in the overhead supply and then it goes sideways and slowly drift back down. Because remember, they are most likely going to continue to cut rates, just not as aggressively as everyone has anticipated. So Lisa says, look at Meta. Looks like the dollar index. So one of the things I'm going to be tasked with for Trading Academy is a ton of social media stuff. It's actually going to be tough for me because it's just so much. We're talking much more interactive on Twitter or X, Instagram, TikTok, YouTube, Facebook. I hate social media. I just think it ruins society, but now I have to be a part of it. So, some things that you guys can help me with, if you would like to do so, is you can email me and tell me, or put it down below the chat if you're watching this on the YouTube video, or down in the comment section. Put down if you had our faculty. We're talking Scott McCormack, Jordan Matthews. You've got Todd Davis, Larry Jacobson, myself. We got many other instructors. Sykes, many other instructors. What sort of things would you like to see them disclose, not disclose, but talk about or release videos on? You guys got to let me know. We could do something on LinkedIn, but LinkedIn isn't really much of a social media platform. It's more like a business connection thing. And I think part of the main goal is to just drum up more attention. I think that right now, if you take the word online training academy, I think it has a black eye reputation because of what happened in the past. And while as unfortunate as that was, the core group of people who really do care about the student development and want them to succeed are around. And there's been a change of leadership, and that individual is, I would argue, much more concerned about student success. It's the paramount thing. Obviously, it needs to make some money as a business, but the belief is, and I'm 100% with this, if you have a student base that succeeds because of the things they've learned from you, they're going to rave about you. They're going to talk about you and promote you. And when they see the bad stuff on social media that, how many people have said online that Online Trading Academy was a scam, and I'm just like, it pains me because it's not. It is a legitimate educational school that's trying to help people succeed. Were there people that said things maybe they shouldn't have? Yeah, unfortunately. And one thing that we know about sales is a salesperson in many cases will skirt that line of what you can and cannot say to get a sale. And that's something that we're not standing for. There's got to be better standards for that. You hear me say it all the time. When I'm making trades, I'll say, this is not the standard results for everybody, and got to be clear. No one's going to be getting rich by this. It takes some time. It takes a lot of effort. So Click, Eric, was an incredibly expensive project that I don't know. I wouldn't say it's dead. It's still going to be used. It still has materials, but it needs a lot of work to it. And right now the money's not there. So hopefully we'll get back to that and bring that one back, because I thought Click was a really cool package, had some really cool features, unique things that other platforms don't have. And what I really liked about Click was the integration of it into the methodology that we teach at Trading Academy, particularly getting into things like the Mastermind Grid and linking all those up. I thought that was awesome. Thanks, Ricardo. I appreciate that. Yeah. It's tough because you could look at, I'm trying to think of a good example of this, but, you can look at a sports team and, let's say some of you might know the Pittsburgh Steelers and Antonio Brown, right? So the Pittsburgh Steelers, for all intents and purposes, great football team. They got a lot of really great players that wanted to work really hard and be good football players. But then you had a guy like Antonio Brown, which became the face of the organization and turned into a complete lunatic, absolute just maniac, and just kind of, a lot of people looked at it and like, oh gosh, the Steelers, they're just trash. Well, no, it's that one guy just tarnished the whole reputation of a great organization. And I think that's something we have to overcome and kind of rebuild that, and really put more of an onus on this education. It's about education, it's about experience, it's about success. It's not necessarily about sales. Obviously, sales is an important piece of it, but we'll get there. Let's see. Scott says, would love to move back to more industry experts in OTA. I felt the loss after the lawsuit and a far more generic approach to take. I wouldn't say it's a much more generic approach to trading taking on. What I did appreciate was the diversity of the instructors, right? So I think what you're referencing there, Scott, is having somebody like a Michael Young on the program, who was a floor trader on the CME, or a Craig Weil, those types of guys. We have a few of those, but the challenge when that whole thing collapsed because of regulatory pressures, and man, I was really shocked to see the actions by the government officials, by the FTC in particular, where there was just pretty much no concern to look at the business as a legitimacy, but listening to the 7 complaints that were filed and just go at it with this blind objective of, we're shutting this down instantly. That was kind of shocking to me. It's like, wait a minute, if you look, we have 14,000 people. 14,000 people sent letters to the FTC saying, do not do this. We love this company. Yet seven people filed complaints. Crazy. Unbelievable. Anyway, let me know under the comments on the YouTube channel, or email me at tradermerlin@gmail.com, what sort of things you'd like to see from social media, right? I've always struggled with, what do you put out there? I like doing this show, but, to pick out a segment, to pick out, one thing I really do like, you guys know, bar chart. So if you go to Twitter, let's go to, you go to Twitter, Twitter does there's so much information out there. There's just so much information out there. Thomasina, I don't know if it was that. I think that there was pressure by, it's a tangled web. For legal reasons, I should probably just shut up. Let me go over here and go to bar chart. So if you follow bar chart, this is awesome. Bar chart has gone, wow, they're already 200,000. When we started off, these guys were at 30,000 followers. That was just a couple years ago. They've done a tremendous job. But why? Look what they post every day. It's always just charts, tables, graphics, news. But remember, they're a news agency. They're a data provider. So they can pull all this information real easily from their site. We're not. So I'm kind of, I can't really pull this stuff. I guess we could put up levels, supply and demand stuff, and Anyway, I would definitely look at bar chart. Bar chart is really good. I like the stuff they've done. They put us some great content out there. Anyway, I'm going off on tangents here. Sorry about that. Margaret, I will not be sharding my trades. Spell check's very important, Margaret. Oh, boy. Didn't think that the shart topic would come up today. There will be no sharding on this program. I know what you meant, Margaret. I share my trades. Yeah. You know, it's fun. You know, it's a double-edged sword, Margaret, because I don't mind showing trades, and I also don't mind showing my losing trades. I'd rather actually show the losing trades than, you know, I don't like gloating about winning trades. But there's sometimes, and you guys have experienced that, where you nail something like, wow, did not expect that to happen. Far exceeded my expectations. And yeah, certainly I'll talk about those. But yeah, I'll share more of my trades as we go forward. I mean, I always try to be transparent about where I'm at. You know, the trader who shall not be named, the Voldemort in my world, who I just can't stand. You know, all it is just draw levels, draw levels, draw levels, draw levels, draw levels. One of them hits this level and you say you took a trade, which you never actually took because it's all done in simulator. And the FTC says, oh, well, this guy doesn't trade and he loses money. So, yeah, I don't know. I don't like, yeah, anyway, I can go on and on. So we got that dollar strength out of the way. In my opinion, this, if you look at what could hurt this market, it may actually be this dollar strength a little bit. We'll run through the top 8 markets here in just a second to kind of wrap up. But this chart right here, you know, that giant move up in that dollar index, obviously a lot of this happening because of interest rates and because of Japan, which is a component of that dollar index. We're up 2.3% in just this week alone. That is huge gain for the week. So if this has a real big surge and continues this surge past that 103 mark and maybe gets to the 105, I definitely expect pain for the equity markets. And that's the normal relationship, right? If the dollar surges, then we should see the equity markets fall. That said, it feels like we're back to the everything bubble discussion. Name something that's not trending up. Almost every market broadly is just aggressively moving to the upside. So let's start at the bottom. We start at the top. I already did the 10-year. Let's look at Bitcoin here real quick. Bitcoin has been obviously beaten down over the past week. Certainly is a very bad week for Bitcoin, but a nice jump up today at 2.32%. You had the Russell 2000, which looked great. 1.43% move to the upside, although still down on the week overall. Trend-wise, I like it. Talked about that Russell pulling back. Continuing on with a series of higher lows. I think what will happen over the next week or two is Russell's going to get back up to this 2,300 mark. If we can break above that and close above that, I think you're off to the races for more all-time highs. Again, you look at all-time highs, it's got to go way back to these highs from November of 2021. But I think that would definitely be your next target for the Russell 2000 if we get above that 2,300 mark on the RTY futures. So looks good to me. Elisa says, I can say I no longer feel like we are in a bear trap kind of market. Yeah, I mean, what's the trend say, right? We look at this, the trend is higher lows. This is the Russell, of course, higher lows and same highs. So that still is bullish. Let's go crude oil. I'm going to go in order here. He meant to say trades. You both mistyped, Margaret. He meant to say short trades, but he said short TDs. Short TDs. So here's your crude oil chart in the day. Now, when we looked at this the other day, I mentioned that if we get above that 72.30 mark, it looks like we'll head right back up to the 76 mark. And man, we got awfully darn close today. Our intraday high was 75.57, which would have brought us right back up to the origin of this last sell-off from August 30th. So all in all, that's logically where I thought it was going to go. And now the question is, does this area hold? This would be the bottom end of your range. But does that $76 mark hold and continue this downtrend? Now, some of you are actually saying it could rally all the way back up to this downward trend line, which is certainly a respectable target as well. But I can't ignore these turning points that happened over here. So we'll see if we can get past this 76 mark. Really, I think it's really going to depend on Israel and Iran, what's going on over there, and hopefully that de-escalates. The OPEC stuff was kind of washed up in this whole story here. NASDAQ on the day, 1.19%, still down on the week. Almost everything. Oh boy, no sharding examples over here, guys. Look like bottom at the end of the month. So I think we were talking about that S&P. Sorry, we're looking at crude oil. Yeah, I like the way that this finished because we had this long bottoming tail. We actually talked about this being a double bottom, and then it just screamed out of it. So it's been a great move up. Of course, the circumstances behind the rally in crude oil, not the best. No one wants to see international conflict here. I'd rather see a move like this because the OPEC members said, "Oh, we're gonna cut production, and therefore prices surge," as opposed to missiles and death, which nobody wants that. Moving down that line, we have the Nasdaq I just mentioned. If you look at the picture here, things have changed. Things have definitely changed just because we are not making that previous high, although we did break this most recent high right around 19,900 from August. We did break above that. Now it feels like we've retested. You had a nice big green candle today. It does feel like the momentum is there. You're still making higher lows. Now we're back to making some shorter-term higher highs. To me, it feels like the Nasdaq will be back to challenging your all-time high here shortly, and then I will certainly go in. Oh my God, you guys are crazy. And I think we're back to those all-time highs here. And I'm with Big Eb. Big Eb was saying, and I don't think we're going to get that crash by the end of the year. And given what's going on with elections, everything, I agree. I think we'll see strength all the way through the end of the year, and then the problems really start up the beginning of next year. We'll see how it goes. Oh, awesome, Luca. Luca Damaro, sei italiano? Buon piacere dal nostro programma, L'italiano non è molto buono. I stopped speaking Italian years ago. Unfortunately, there's not too many Italian speakers that want to speak here in California. So your S&P. All right, this is one I think is a very interesting chart. We had drawn out this little yellow box, and it's been staying in that yellow box. And boy, it's oscillated back and forth in that range for 2 weeks now. Great green candle off that base. Obviously, what ends up happening here is you're going to get a charge back up to this high. If the strength just feels there, it's looking stronger than the NASDAQ, right? Because the NASDAQ is not at all-time highs. It's just below them. So right now, if you take the Dow out of the equation, S&P is our strongest market. I do anticipate this rallying back up to those highs next week, barring some crazy geopolitical thing that just derails our markets over the weekend. Just momentum feels good, feels positive. This was their big killer. This might be that momentum killer that I just spoke of. And because we're seeing that dollar rally so much, that's starting to have an impact on gold and silver. So gold was down 0.43% today. Silver had a really long topping tail. Some would argue that's a shooting star. And the chart still looks great. Long term, I'm still very bullish on silver, but I do think a correction is bound to happen if that dollar keeps on rallying up. So all of a sudden, things looking okay here. Oh, Bitcoin bottoms every end of the month. I don't know if I'd say bottoms every end of the month, but I definitely am in the camp of we've turned the corner. We haven't made new lows here, so we're probably turning that corner, and the bull market for Bitcoin is just about to start the last year, that 4-year cycle. So last year, the 4-year cycle would start in November of 2024 and go to this vertical line right here. That's actually October 25th. That's probably when I'll start liquidating my Bitcoin, and that was when it's going to be right around 250,000. So remember the days when I was saying 250. Some people say I'm nuts, but I've got science and numbers behind it, and historical price action that would tell me that 250 is completely normal for it to reach that price target. Anyway. All right. Let's go on to... I already covered everything I wanted to get to there. And... let's talk about AI for a second. So... we've got a really interesting thing happening with AI. Obviously, it's the gold rush for AI. Nvidia is the one supplying the picks and shovels, and their stock has just been booming, right? Nvidia has been doing great. Now, it's struggled a little bit recently. It does have a pennant formation. Here's your chart of Nvidia. But that picture right there, that's definition of strength. It's had a monumental rally, and this is obviously tweaked here a little bit, but you can go back into 2022. This thing was $10.81. This is split adjusted, by the way. Right? Split adjusted, but now you're at 124. That is a phenomenal rate of return. But notice what's happening right now. It's not making new lows. It still hasn't made new lows. It's just traversing back up. So had a little bit of a pause. Now all of a sudden, potentially can move back to the upside because of comments and demand for Nvidia. And the question that I have is, where are all these chips going and what can it do? So we know what's going on with things like OpenAI, which now are most likely going to go public here soon. They got a new valuation. It was $180 billion valuation based off the latest funding round. I love OpenAI and the things that it can do. Fantastic. It's now integrating that into the Apple iPhone with Apple Intelligence. Is backed by ChatGPT and OpenAI. Great. But then you have OpenAI coming out with Sora, which is their visual studio, which is impressive, but that's still kind of in beta. You have Tesla, who's been buying tons and tons of Nvidia chips and building out the infrastructure to have one of the largest AI brains as well, and I would not bet against Elon Musk to be the victor in that space. However, you also have Mark Zuckerberg, who's got billions and billions of dollars spent on AI. Now, I had a look today at their latest AI program, and would not surprise me as to why this is happening. Their latest AI is video, and it is pretty freaking cool. Unfortunately, you can't. I use their AI, which is kind of like a Chat GPT type thing. Let me see if I can bring it up for you guys here real quick. So you go to type in Meta AI, and you can bring it up, and you have to agree to it and sign in, but it's pretty much like ChatGPT. Oh, it's not going to let me do it from this account. I don't think I have it signed up here, so give me just a second. China is getting the Nvidia chips on the black market. Of course they are. And then they'll get those from the black market, and then they'll pirate them, and the quality won't be as good, but they'll still work. So, another thing you guys can play with if you're bored, and some of you might hate Meta or Facebook, I get it. Here is Meta AI. And it looks like this. You can have it do all kinds of things. So I'm going to take what Margaret just said, which is China is getting the Nvidia chips on the black market. And I'm just going to say, create me a graphic. There you go. And it's actually way faster than Midjourney. It's going to... I need more clarity, but you can have it. You can pretty much have it create any image for you. So just create a picture of China as the chip king, and see what it comes up with. I can't even type today. So if you guys want something that's free, that's actually a pretty cool resource. This does a lot of same things that ChatGPT can do and OpenAI, but it does really quick graphics like this. Oh, that's great. The Chip King. I love it. That is a good one. That might make my day right there, the Chip King. And they have it watermarked as well, so you get those watermarks unless you pay for it. But you can go out here and do things like animate, and it's pretty cool what this AI program will do. They're of course, taking NVIDIA's pieces and really bringing a lot of power to it. I mean, that's a pretty cool little graphic that real quickly in a couple of clicks, I now have full animation of it, full control. Let's go back and see if I take one of the other ones. Oops. Oh, it gave me that one. I can't go back, and let's go back and click this guy and animate him and see what that'll happen. But this is really quick. Midjourney takes at least 60 seconds to do it, and it doesn't do animate. It just does pictures and graphics. But for those of you looking for resources for free graphics and things, that's pretty cool. Anyway, we're off on tangents. My bad. All right, so that was it. Pretty much all I need to talk about. Dollar strength, unemployment rate. We talked about Longshoreman Strike, which I think takes a huge element of uncertainty off of these markets. For me, that means bullish, and then the dollar. The only piece that I would say is that bearish piece. You have the jobs report, very bullish in my opinion. Both the jobs report and the unemployment rate today, great for our markets going forward. Now, next week, we do have consumer price index. We have PPI numbers coming out. You have New Zealand with a rate cut. They're expected to cut 50 basis points next week. And next Friday, drum roll, next Friday is the beginning of earnings season, folks. So, we're always looking for what's that driver of markets and optimism or fear, panic, greed, whatever. Next Friday, you've got, your JP Morgan's coming out with their earnings, and that could be a pretty important factor for our markets next week, but we'll wait when you get there. So let's go look at, there's really nothing to look at from an economic calendar and earnings perspective because there's nothing going on Monday that's really noteworthy that's going to move your market. So that said, I'm going to wrap things up. Cheers to all of you. I'm going to literally go downstairs and have a nice cold frosty beverage right now because it's Friday. I hope for those of you that are in Southern California, you make it out to Huntington Beach to go check out that air show. It is fantastic. For the rest of you, have a great weekend. I hope you do something fun. Email me at tradermerlin@gmail.com. Any ideas that you have that you think would be really cool for social media. I want to build it. I'm at the position right now where I can be building these things, and I don't have resources, but I can find them to make really cool things for you. So just let me know what it is that you'd like to check out. If there's something that you want to see that might be different, you can email me or put it down below the YouTube video. Margaret says, does this change the rate cut probabilities? Yes, it does. It dropped the probabilities a little bit, certainly dropped the probabilities for November. Because remember, November was, are we going to get a 50 basis point or 25? Now it's 25. Nobody's talking 50 at the next meeting, and that's because of that unemployment rate today. All right, thanks everybody. Have a fantastic remainder of your weekend. Do something fun. I will see you on Monday. Take care, everybody.